I think that's a function of which stocks have all the market cap and which don't. And I really, like sometimes the market is very complex. This time it's not. I think the story's been the same day after day. The tech sector, technology as a sector is up 18% on the year. The S&P is essentially flat. There are no other sectors of the S&P that have a double-digit gain. None. Not even healthcare, not even consumer staples, where you would think that would be happening. So this is a very unique situation. And then, even look today, Sarah. What worked today? It's very bizarre. In addition to tech, home builders and gold miners are the two best performing industry groups. There's no story you can tell. It's random.
Well,
there's no story in which it's great to own
all that, basically.
All right, fine. I guess we'll accept that. But it's not a story about economic growth being great for home builders. It's very sloppy. But tech is straightforward, not complicated. It's a greater and greater part of where businesses and people are spending money. It seems to be pretty unaffected, or if anything, it benefits from the scenario we find ourselves in. Today, we have over 3 million cases of coronavirus. That's not going away. 60,000 new infections nationwide yesterday. Not the kind of record that we want to have months into this crisis, and yet here it is. So why wouldn't they be reaching for Alphabet and Apple? Makes perfect sense to me.
Apple, Microsoft, PayPal, Nvidia, the chip names all higher today. How about Tesla? Goldman Sachs raising its Tesla price target to $1,300 a share from $950 on the back of better than expected second quarter deliveries. Meanwhile, Reuters reporting that Tesla is having a moment in South Korea. The electric car maker seeing its best month in that market with more than 2,000 deliveries in June and at least 4,000 more on order, according to sources. Reuters noting that the Model 3 is now South Korea's #2 imported car, beating out BMW and Audi. Just another reason maybe, Mike, for people to be bullish on Tesla. It's interesting that the pullback today is so small relative to the size of the gains we've seen.
Sure. I mean, it's another excuse to be bullish. I would put it as excuse rather than reason. At some point, we have to step back and say we're talking about a $250 billion market cap company, and those numbers are in the 4 digits in terms of sales in South Korea. We're talking. So, the scale of the company as a financial entity is so raced ahead of what, in fact, the business is doing right now. Now, we can project ahead. You can tell me about 1 million units and massive margins on cars well over and above what any other automaker has been able to do, even though Mercedes only makes $3,000 per car. All that aside, I do think that the story is in place just because the momentum is in the stock. And I think that really is the direction it works. The stock is got the momentum, and the bulls are in charge. And then we have to kind of knit the rationale from that.
Josh, what's your advice to anyone that's considering getting into this name that's currently being wooed by this momentum to the upside?
So I don't have any position in Tesla, and I've never really had a strong opinion about whether or not somebody should be buying or selling. I've always looked at this as a different story depending on whether or not you were an investor or a trader. But that's not, I don't think that's been the right take, because both investors and traders have done well here. For the last couple of years, almost consecutive months. There really hasn't been a tough period for Tesla, short-term or long-term, in a while. So my advice is to just understand that at a certain point, starting valuations will matter. I know that seems ridiculous when you're looking at a stock that just tripled. Starting valuations didn't matter. It was expensive before the triple, but they really will. And the best example that I point people back toward is the Nifty 50 stocks in the 1960s. Everyone was right about how promising the future was for McDonald's, Procter & Gamble, Coca-Cola, Xerox. Everyone was dead right that those were going to be the growth companies, but their share prices, you had to wait 10 to 13 years to get back to where you were in the mid-60s. By the time you got through the 70s, you were still negative in those names. So that is something that could happen, not just to Tesla, but to a lot of these companies where we're basically pulling forward enthusiasm 10 and 20 years at a time. At a certain point, it's going to matter. I don't know exactly when.